So you want to buy some crypto. Your future self will thank you, just as long as you do it right. The difference between knowing what you're doing and going in blind can literally be the difference between a 10x or losing half your investment. That's what this video is all about. Welcome, my friends. If you're new here, I'm the DeFi Doctor, Head of Education here at Decentralized Masters. So let's jump into today's topic. You probably already know about some of the main places where you can buy your first bit of crypto. Exchanges like Coinbase, Binance, Kraken, and many others. These are what we call centralized exchanges. Let's call them Main Street. The name tells you a lot what you need to know. These are centralized companies that operate similarly to apps like Robinhood, Charles Schwab, or what Think or Swim do for the stock market. They connect buyers and sellers. Centralized exchanges are convenient, but that convenience comes at a cost. You could face fees exceeding 3% for every purchase or sale of crypto you make. That's massive. $30 taken away on your first $1,000 is way too much to pay. This doesn't even include hidden fees, fees on spreads. This is when a centralized exchange charges you a higher price for crypto you're buying, or buys what you're selling below the market price. It's pretty insidious if you ask me. Sounds like it should be illegal, honestly, but it isn't. This is where decentralized exchanges or DEXs come in. We call these native exchanges. They solve pretty much all of the problems you'll find on Main Street. First off, you don't need to identify yourself to use a DEX. Anyone can use any DEX whenever they wish. This gives them a very critical property in crypto, permissionlessness. You don't need permission to use them. This also means you don't need to connect your bank account to them, and you don't even have to deposit your money there like you do with centralized exchanges. This gives them another crucial property, trustlessness. You don't have to trust a DEX whatsoever. You retain full control of your funds, before a transaction, during it, and after. There are more practical benefits too. The fees on a decentralized exchange are often below 1/10 of a single percent point. That's 30 times cheaper than what you would be paying on a centralized exchange. Not only do I not need permission to use a native exchange, I don't need permission to make my token tradable there either. And this is where the secret is. This is by far where you'll find the opportunities to make the most money possible in crypto. When a new cryptocurrency launches, you won't find it on Main Street. They need to vet these tokens, buy a bunch of them so they can benefit first and foremost. Of course. In essence, Main Street needs to give them permission to be tradable on their platforms. Not so on every native exchange. If I launch a token, I could immediately make it tradable on a native exchange so that anyone can buy it. This means that practically every single cryptocurrency out there was available on a native exchange far sooner than anyone could buy it on Main Street. Finding new tokens on native exchanges is the key to being early. If you're buying it on Main Street, chances are you're the exit liquidity for those who were there first. Most people only peruse cryptocurrencies from the couple hundred tokens they might find on Coinbase. Well, there are millions of cryptocurrencies out there. Literally millions, with hundreds more launching on a daily basis. No company can keep up with all of that. You won't find the sweeping majority on Main Street exchanges until it's far too late. Fact is, most people don't even know that there are two crypto markets, and not knowing this is costing them millions. Here are some examples of exactly how. Let's take a look at WIF that went viral just recently. It got listed on the native crypto market at $0.004 or 0.4 of a cent in December 2023, and then it went straight up to $4.60 in April 2024. That's a 1,150 gain in just 4 months. Now, guess when Coinbase listed it? On November 14th, 2024, 8 months later. And at what price? At around $4, which is the local peak. From there, it went back down in a straight line down to $1. So if you didn't buy WIF on the native market, not only did you miss out on that 1,000x gain, but if you got in after the Coinbase listing, you lost money. Now let's take a look at Sandbox. It got listed on the native crypto market at 66 cents in August 2020 and went straight up to $7.46 in November 2021. That's a 113x gain. That's over $100,000 in gains if you just put in $1,000 as an initial investment. Main Street exchanges like Coinbase listed Sandbox in May 2022, 6 months after its peak, completely missing out on this 100x. And worse, since then, Sandbox keeps going down. Another example is Mantra. It was a mere 5 cents back on December 25th of 2023 when our senior analyst first called it to our members. And we've talked about it many, many times over. Now it's worth over $6. Yes, $6. $10,000 invested into Mantra would have turned it into $1.2 million. That's over 120x. And to this day, in 2025, it's still not listed on Coinbase, while most of our community members have been riding this Mantra wave. Or take a look at Radium. We're still in. It was just 74 cents back on the 14th of December 2023 when our team called it out. Now it's worth over $5.20. That's almost a 7x return. That means if you invested just $10,000 in that asset, when we were calling it, you would have made $70,000 by now. This is another example of a native crypto asset. Though I'll admit it, it's not as good as 120x like Mantra did. I'll give you two more from our research and connections. Ondo Finance. It was just 22 cents back on January 18th, 2024, when our team first called it out. I mentioned it again during a live call with our members when it was breaking out back in November. We bought in much before BlackRock announced a partnership with Ondo. Now it's worth $1.32. That's already 6x returns and we're still on it. Now a last one. Here's Sweet. It got listed for $1.40 on the native cryptocurrency market in 2023. But it's still not listed on Main Street markets like Robinhood. Our analysts decided to call it to our members when it was lower than its original listing price at 80 cents only, explaining that it was now a good opportunity. It recently peaked at $5.30 when we took profit for a quick 6x return. Let's see what happens when Robinhood finally decides to list it. So it should be clear now. If you don't have access to native crypto markets, you simply cannot access the same level of returns my members or I have access to. So just by accessing the right crypto market, you're literally ahead of 99% of crypto investors. You'll be able to get in cheap, and as a result, you make a lot more money. Now, let's do a comparison of how much more money. Let's take a very recent example that also went viral. Not all assets go down after a Main Street listing. Otherwise, their businesses would fail. However, the lion's share of the profits is definitely gone already. That's always the case. Now let's take a look at Pepe. For Pepe, I'll use the market cap for when it got listed on native crypto markets versus the Main Street exchanges. Because the price of Pepe is so ridiculously small, in the pennies of pennies, that I can't even say it. So it got listed on the native crypto market at 80 million market capitalization in March. It got listed on Coinbase on the 13th of November of 2024 at a market capitalization of $6 billion. And it did go up to $12 billion, so a clean 2x return in just a few days' time. But if you had bought it on the native crypto markets and sold it at the same peak of $12 billion, you would have made 150x returns. So for $10,000 investment, the same asset would have turned into $1.5 million instead of just $20,000. That's 75 times more on the same asset that you're leaving on the table. That's why the first thing we do is give you access to native crypto markets. Before we conclude, our point isn't to avoid Main Street completely and entirely. There's an ideal way to leverage both here. If you want the best of both worlds, the best setup involves a mix of both. This is how we do it. We have a Main Street account that we transfer money into from our bank account. This lets us take that first step of converting cash into crypto. From there, we don't buy the crypto we want, whether it be Bitcoin, Ethereum, or anything else. Instead, we buy stablecoins with her cash, either USDC or USDT. The fees on that can be as low as 0%. So far, we've paid nothing, no fees at all. And that's when things get really interesting. Once we have our stablecoins, we withdraw them from the main street into our own wallets so that we can use native exchanges the rest of the way. And that's exactly what we do. We swap our stablecoins for the currency we want to buy, buying at the lowest possible fees and making that happen. And there you have it. Now you know the difference between main street exchanges and native exchanges. And if you follow the approach we just shared, you could make multiples more on your portfolio while saving thousands of dollars in fees. No compromises. We hope you'll learn something today, or at least enjoyed the video. Thanks for watching. Please don't forget to like and subscribe and see more content like this in the future. Thanks a lot, and I'll see you in the next video. Cheers.